This program is brought to you by realestate.com.au. Keep moving with Australia's #1 address in property.
It's great to have your company here on Business Now. Let's go around the country and have a look how the auction clearance rates for housing happened over the weekend. And across the country, there were 1,310 auctions. It was strong. 6.2% of those were sold. In Sydney, there were 460 auctions and just a little over 63% of those were cleared. Let's go to Melbourne. It was super duper strong there. 490 auctions. And have a look, almost 74% of those were sold. Melbourne's picking up pretty quickly. In Brisbane, 72 auctions and also 55% of those were sold. In South Australia, traditionally our strongest market over the past couple of years, there were 56 auctions and 75% of those were sold. So that is pretty strong. And in Canberra, there were 42 auctions and 69% of those were sold. So let's bring in here Angus Moore, Senior Economist with REA Group. Angus, always good to chat to you. The Reserve Bank tomorrow puts out minutes, which kind of should explain why it didn't cut interest rates at its meeting in August. But just looking at the clearance rates, it seems as though investors, home buyers, have simply ignored all that and they're banking on future rate cuts.
Yeah, thanks for having me, Ross. It was obviously a bit of surprise that we didn't see a cut this month, though we're certainly expecting to see one when they meet next in August. But obviously those minutes will be very closely followed. The RBA does put out a press release immediately following the decision, though that tends to be pretty short and the minutes obviously contain a lot more detail. It does look like, kind of contra my view and contra what was the view kind of more broadly in the market, the RBA is not fully convinced inflation is solved yet. They're not as convinced as everyone else that inflation is back right around the midpoint of the target sustainably. And so they're waiting for that CPI release that we're going to get later in July. Whether that swings the decision in August one way or another, it seems fairly confident that we'll get a cut, but certainly a lot to be looked forward to in the minutes coming out tomorrow.
And it'll also be interesting because the Reserve Bank Governor, Michelle Bullock, speaks at the Annika Foundation. This is generally one of the Reserve Bank Governor's big speeches of the year. That's on Thursday this week. And given the labour data that came out last week with that surprise increase in the unemployment rate, that again will be something no doubt should be questioned about.
Yeah, it's always a big speech for the governor, and certainly we'd expect that to continue again this year. The labour force last week was pretty interesting. We saw a bit of a softer picture there. Employment was flat. The unemployment rate was up to 4.3%. That all sort of points to a generally slowly softening labour market, which is probably not a surprise in an environment in which consumer spending's been very soft, economic growth's been very soft. If anything, the fact that the unemployment rate has remained as low as it is for as long as it has been the surprise. So, in many ways, this is kind of squaring the circle, as it were. But it'll be interesting to see where the RBA sees that and whether that's going to sway their opinion. My sense is it probably won't completely make the case. It is 1 month data. It can be a little volatile, so I don't think they'll put too much weight on it. But I think it's certainly consistent with a cut in the next meeting.
And the other thing is, that long-term trend of unemployment, yes, it was a surprise. Yes, it was a bit of a jolt upwards, but it has been trending upwards over a period of time. Even the Reserve Bank expected unemployment would be at this rate by the end of this year.
Yeah, that's exactly right. We're coming from a very low base. It's important to remember, unemployment, even at 4.3%, is still extremely low by historical standards, around the sort of levels we last saw 5 decades ago. So the fact that we're moving up is not a surprise. It is expected. It is what the RBA is forecasting. It will get us back to more like what the RBA considers neutral. There's obviously a lot of uncertainty around what that number exactly is, but it's probably somewhere in the order of 4.5 towards, 4.75. And so, as we move back towards that, the RBA is going to get more and more comfortable with cutting rates further.
I'll tell you what, always good to chat to you, Angus Moore from REA Group. Many thanks for your time today.
Pleasure. Thanks for having me, Ross.